Trump policies could trigger the next silver shock. Hello everyone, I'm John AD, and welcome back to the channel. I hope you're doing great today. Now, before we begin, I want you to do something for me. Just sit back, relax, grab your coffee, and really stay with me on this one. Because what we're about to discuss is not normal market news. Something big is quietly building right now under the surface of the US financial system. And most people, honestly, have no idea it's happening. Because while the mainstream media is busy talking about stocks, politics, and headlines, silver is setting up for what could be one of the most shocking moves of this decade. And here's the twist. This next silver shock might not come from Wall Street. It might come from Washington. Yes, we're talking about Trump-era economic policies, trade war pressure, inflation risks, and a supply crisis that could send silver exploding when the public least expects it. So the real question is simple. Could Trump policies trigger the next historic silver breakout? And if so, are American investors ready for what comes next? Because silver is not just a metal anymore, it's industrial power. It's economic warning, and it may be the next battleground asset of 2026. In today's video, I'm going to break it all down step by step. We'll look at the policies, the inflation risks, the Federal Reserve tension, the industrial shortage, and the exact reasons silver could shock the system faster than anyone thinks. So make sure you stick with me until the end, because the final conclusion might completely change how you see silver and gold going forward. And if you enjoy serious market breakdowns like this, real analysis, no hype, just the truth, then don't forget to hit that like button, subscribe to the channel, and turn on notifications. All right, let's get into it. But as one of the most dangerously overlooked assets in the entire American market, for months, most people have been watching stocks. They've been watching crypto. They've been watching interest rates. But almost nobody has been paying attention to what's happening in silver. And that is exactly what makes this moment so important. Because historically, silver does not move slowly. Silver moves violently. When it wakes up, it shocks the system. Now, here's the question Americans are starting to ask. Why is silver suddenly heating up again? Why are investors quietly returning to precious metals? And why does this setup feel different from anything we've seen in years? The answer begins with one word: instability. The US economy is entering a period where uncertainty is no longer theoretical. It's real, it's visible, and it's spreading. Inflation may have cooled from its peak, but the cost of living remains high. Debt levels are climbing, global tensions are rising, and markets are starting to realize that the next major shock may not come from Wall Street. It may come from Washington. Silver has always played a unique role in America's financial history. Unlike gold, which is primarily held as a store of wealth, silver is both money and an industrial weapon. Silver is inside solar panels. It's inside electric vehicles. It's inside defense technology. It's inside nearly every critical system powering the modern US economy. And that's why silver is not just an investment metal anymore. It is a strategic metal. And when demand increases while supply stays tight, prices don't rise gradually. They explode. Now, the reason this moment matters is because silver has been suppressed, ignored, and underestimated for years. But under the surface, pressure has been building. Industrial consumption is rising. Mining output is not keeping up. And investor interest is starting to return at the exact moment the US political landscape is shifting. That is the key. Because silver doesn't move in isolation. Silver moves when the world feels unstable. Silver moves when the dollar feels vulnerable. Silver moves when investors start looking for protection. And America is entering one of the most politically and economically tense periods of the decade, which is why this debate is no longer just about charts. It's about policy. It's about power. And it's about what could happen next if major decisions out of Washington begin triggering shockwaves across commodities. So as we begin this documentary, here's what you need to understand. Silver is not rising by accident. It is setting up. And in the next chapter, we're going to look at the real catalyst entering the picture: the return of Trump-era economic policies, and how they could be the spark that triggers the next silver shock. Trump's economic agenda returns. What Trump's policies signal for markets in 2026. Now, in Chapter 1, we established something critical about silver's behavior. Silver is not moving randomly, it is reacting to pressure building inside the US financial system. And that brings us to the next major factor entering the equation today. Politics is becoming one of the biggest forces shaping the metals market again. Because whether people like it or not, markets do not trade only on numbers. Markets trade on expectations, fear, and government decisions. And right now, the United States is heading into a political and economic crossroads. One name is once again dominating the conversation: Donald Trump. Now, this is not a political video meant to take sides. This is a market reality video focused on economic consequences. Because Trump-era policies historically created some of the most aggressive market reactions we've seen. And if similar policies return in 2026, metals may not stay calm. So the question becomes very simple for every American investor watching. What does a Trump economic agenda mean for silver in the coming months? Let's break it down clearly using market mechanisms, not opinions. Trump's economic approach has always centered around three powerful forces. Strong tariffs are the first pillar of his strategy. Aggressive trade positioning and industrial expansion make up the rest, and each of these connects directly to silver's future. Silver is both a monetary hedge and an industrial necessity at the same time. First, let's talk about tariffs, because they change the structure of global trade quickly. Under Trump, tariffs were used as economic weapons, especially against China. Now, if new tariff rounds return, supply chains tighten almost immediately. Import costs rise, and inflation pressure can restart across the U.S. economy. And when inflation returns, silver historically reacts fast compared to many other assets. Investors run toward hard metals when purchasing power feels threatened. Silver becomes a hedge in that environment of uncertainty. It performs differently than stocks when fear starts rising again. Second, Trump policies often push for domestic manufacturing revival across America. That sounds powerful, but it creates a hidden demand shock for silver. Manufacturing requires silver in enormous quantities across multiple sectors. The more America builds, the more silver America consumes every day. Silver is inside solar infrastructure, electric vehicles, and advanced technology. It is also inside defense systems and critical industrial production. So an America First industrial boom could ignite silver demand far faster than markets expect. Not intentionally, but structurally through rising consumption. Third, and most importantly, Trump has repeatedly pressured the Federal Reserve in the past. He has criticized interest rate decisions and pushed for growth-focused monetary policy. Now imagine political pressure colliding with the Fed's battle against inflation. Markets become unstable, and the dollar becomes less predictable. And whenever the dollar looks uncertain, precious metals begin moving aggressively. Silver thrives in instability because it responds instantly to currency fear. This is why investors are paying attention now, not later. Markets price the future long before the headlines arrive. Silver does not wait for official confirmation from Wall Street. Silver moves when the system starts feeling politically unstable. And I want to be clear so nobody misunderstands the argument here. Trump does not control silver prices directly, but policies shape economic conditions in real measurable ways. And economic conditions shape commodities and investor behavior. Silver is especially sensitive because it sits between two worlds. It is both money and industry at the same time. So, if we enter a new cycle of tariffs, industrial demand, and inflation pressure, silver doesn't just rise slowly, silver shocks the market violently. That is why this debate is gaining urgency right now, because the next silver move may be triggered by Washington itself. And in the next, we're going even deeper into the global mechanism behind this. Trade wars, China, and geopolitical tension could accelerate the next silver explosion. Tariffs, trade wars, and metals demand. Now that we understand how Trump-era policies can reshape the U.S. economic environment, we must confront the larger force behind silver's next shockwave, global trade conflict. Because silver is not just traded in New York or Chicago, silver is part of a worldwide industrial battlefield involving America and China. And when the U.S. and China collide economically, commodities feel it first. Trade wars do not stay on paper. They hit supply chains, prices, and inflation directly. The first thing tariffs do is increase the cost of imported goods into the United States. And when costs rise, inflation pressure returns almost immediately. Now remember, silver thrives during inflationary stress. Investors rush toward metals when the dollar's purchasing power feels under threat. But the trade war effect goes deeper than inflation alone. It also impacts the real physical demand for industrial silver across critical sectors. China is one of the largest industrial consumers of silver in the world, and the United States is one of the most strategically dependent on silver-based technologies. So when the relationship between these two powers becomes tense, silver becomes a pressure point. It is both an industrial input and a financial hedge at the same time. Now think about what happens if tariffs return aggressively in 2026. Companies begin reshuffling supply chains, stockpiling materials, and preparing for shortages. And when industries start stockpiling silver, prices do not move gradually. Prices spike sharply because the supply is not flexible. Silver is not like oil where production can adjust quickly. Silver is a tight market, and mining output cannot rise overnight. That means demand shocks create explosive moves. Even a small disruption can trigger outsized price reactions. Now, another key factor is technology competition between the US and China. Both nations are racing for dominance in EV production, solar energy, and defense innovation, and silver is embedded inside all of those systems. The green energy transition alone is one of the strongest long-term silver demand drivers on Earth. So tariffs and trade conflict do not reduce demand for silver. They can actually increase it by forcing domestic production and strategic stockpiling. And this is where the silver shock scenario becomes real. Trade wars create the exact conditions where silver demand rises while supply stays restricted. Now, we also cannot ignore the currency dimension. Trade conflict often weakens trust in global dollar stability and increases safe haven flows into metals. Gold usually benefits first, but silver follows with more volatility. Silver is smaller, thinner, and reacts with sharper percentage moves. That is why silver shocks are often sudden and dramatic. The metal can jump violently when global stress accelerates. In past cycles, trade wars have triggered commodity rallies unexpectedly, and the market often realizes the seriousness only after prices have already moved. So the warning for American investors is clear. If tariffs escalate and US-China tensions rise again, silver becomes one of the most sensitive assets on the board. Because silver sits at the intersection of inflation, industry, geopolitics, and currency trust. It is not just a metal, it is a global stress indicator. And this is why it becomes critical. Because the next step in this chain reaction is inflation returning through policy and trade pressure. In the next, we will ask the most urgent question of all. Could Trump-era policies reignite inflation and send silver into its next explosive surge? Inflation, shock, risk. Now, after understanding tariffs, trade wars, and rising industrial pressure, we reach the next explosive trigger. Inflation is the force that can accelerate silver faster than almost anything else. Because silver is not only an industrial metal, it is a monetary metal, and monetary metals react violently when inflation threatens the value of the dollar. The United States may have cooled inflation from its peak, but the underlying pressures have not disappeared. The cost of living remains high, and households still feel economic strain. Now imagine a new policy cycle that pushes prices upward again. That is where the silver shock risk becomes real. Trump-era strategies often involve aggressive domestic growth and trade protection, and those conditions can create inflation rebounds through higher input costs. Tariffs raise import prices immediately, and higher import prices spread through the entire American economy. When inflation rises, the Federal Reserve faces a brutal dilemma. Either rates stay high longer, or the dollar loses credibility through loose policy. Both outcomes increase market instability, and silver thrives in instability because investors seek protection outside paper currency. Now here is the key historical pattern investors must understand. Silver does not respond to inflation slowly, it responds suddenly. Silver's moves are often delayed until pressure builds too far. Then the market reprices violently in a matter of weeks or even days. Inflation is psychological as much as mathematical. Once Americans believe prices will keep rising, they change behavior immediately. Businesses stockpile materials, consumers rush purchases, and investors flee into real assets. Silver becomes one of the fastest beneficiaries of that shift. Now, inflation is not just about consumer goods. Inflation in commodities and industrial inputs is equally powerful for silver demand. If industrial production expands while costs rise, silver consumption accelerates, and supply cannot respond fast enough to prevent price spikes. Silver is already a structurally tight market. Demand surges expose shortages faster than most people realize. This is why inflation cycles create silver shocks. The metal reacts not only as an investment, but as an industrial necessity. Now add one more factor that makes this even more dangerous. U.S. government debt and spending levels remain historically massive. Heavy spending can fuel inflation expectations over time. And inflation expectations are the gasoline that metals markets ignite from. If inflation returns while the Fed is under political pressure, volatility expands rapidly. The dollar becomes uncertain and metals regain center stage. Silver is more explosive than gold in these moments. Gold moves first as stability, but silver moves second as the shock amplifier. This is why silver rallies feel different. They are faster, thinner, and emotionally driven by fear and scarcity. So when people ask whether Trump-era policies could trigger a silver shock, inflation is one of the strongest mechanisms. Inflation is the bridge between politics and metals. And the real question becomes unavoidable. What happens if inflation flares again while industrial demand stays strong and supply remains restricted? That is the exact recipe for a historic silver move. And that is why this debate is no longer theoretical. In the next chapter, we will examine the most powerful institution in this entire equation, the Federal Reserve, and the coming conflict between interest rates, the dollar, and silver volatility. The Federal Reserve versus Trump pressure. Now, after inflation risk, we arrive at the core battlefield behind every precious metal shock. The Federal Reserve sits at the center of the dollar system, and silver reacts when that system looks unstable. Because silver is not just a commodity, it is a referendum on confidence. When trust in monetary policy weakens, metals begin moving rapidly. The Fed's primary mission is controlling inflation and maintaining stability, but stability becomes harder when politics begins applying pressure from the outside. Trump has historically criticized the Fed for keeping rates too high, and if that dynamic returns, markets will immediately price uncertainty into the dollar. Now, interest rates are one of the strongest forces controlling silver's behavior. High rates support the dollar and reduce metal demand, while lower rates weaken the dollar and boost metals. So if political influence pushes toward easier policy, silver gains momentum. The metal begins acting like a warning signal that the currency system is shifting, but the Fed cannot simply cut rates without consequences. If inflation remains high, cutting rates too soon could reignite price pressures across the economy. That creates a dangerous crossroads. Either rates stay high and slow growth, or rates fall and inflation accelerates. Both scenarios increase volatility, and volatility is where silver becomes explosive. Now consider what happens if the Fed stays restrictive while political leadership demands growth. Markets begin fearing a policy conflict at the top of the American financial order. That fear alone can move metals. Because investors hedge against uncertainty before any decision is officially made, the dollar is powerful, but it is also sensitive to confidence. When markets sense pressure on the Fed's independence, the perception of stability cracks. Silver responds aggressively to cracks. It does not wait for collapse, it moves at the first sign of stress. Now the silver market is smaller than gold. That means capital flows have a disproportionately large impact. Even a modest shift in investor positioning can cause major price spikes. Silver shocks happen because the market is thin and emotional during uncertainty. If the Fed holds rates too high, recession fears increase. And recession fear drives demand for safe havens like gold and silver. If the Fed cuts too soon, inflation fear returns. And inflation fear drives demand for hard assets even faster. So silver benefits in both extremes. It thrives when the Fed is trapped. This is why central bank policy is so critical in this debate. Trump-era pressure, inflation dynamics, and Fed decisions form a single explosive triangle. Now add the global dimension. If foreign investors begin questioning U.S. policy stability, metals flows accelerate internationally. Silver becomes part of a global hedge against U.S. uncertainty. It transforms from a trade into a macro signal. So when people ask whether Trump policies could trigger the next silver shock, this chapter reveals the deeper truth. The shock may come from the collision between politics and monetary control. And in the next topic, we go even deeper into the physical side of the equation. Because silver shocks are not only monetary, they're also driven by real-world shortages and supply crises. Next topic, we'll expose the industrial silver supply problem that could make the next move unstoppable. Now that we've covered inflation, the Federal Reserve, and policy uncertainty, we must face the physical reality behind silver. Silver is not just a financial asset. It is a critical industrial resource. And unlike paper currency, industrial silver cannot be printed. If demand rises while supply stays tight, prices do not climb gently, they surge violently. Silver is essential to the technologies powering modern America. It is embedded in solar panels, electric vehicles, defense systems, and nearly every advanced electronic circuit. This means the U.S. economy consumes silver whether investors notice it or not. Industrial demand keeps growing even when markets are distracted. Now here is what most people don't understand. Silver supply is not expanding fast enough to match this demand. Mining production is slow, expensive, and constrained. New silver mines take years to develop, not months. And silver is often mined as a byproduct of other metals like copper and zinc. That means silver output depends on global base metal production, not silver demand alone. This creates structural fragility. Even if silver demand spikes, supply cannot easily respond. Now think about what happens in a world of industrial expansion and geopolitical tension. Companies begin securing critical materials before shortages worsen. Silver becomes one of those strategic materials. Once stockpiling begins, supply tightness becomes extreme. The green energy transition is one of the biggest silver demand drivers in history. Solar panel production alone requires massive quantities of silver every year. And electric vehicle adoption adds another layer. EVs use far more silver content than traditional vehicles due to electronics and power systems. Now add defense spending into the equation. In periods of global tension, military and aerospace demand increases, and silver becomes even more strategic. The U.S. does not treat silver only as an investment metal in these cases. It becomes part of industrial security. This is why a silver supply crisis is not science fiction. It is a mechanical outcome of rising demand meeting restricted supply, and when the supply side breaks, markets reprice instantly. Silver shocks happen because there is not enough metal available at current prices. Now, investors often focus on gold because it is the classic safe haven. But silver has a unique advantage. It is both money and an industrial necessity. That combination makes silver more volatile. When shortages appear, silver can outperform gold dramatically. This is why silver rallies often feel explosive. They are driven by real consumption, not only speculation. And if Trump-era industrial expansion policies return, domestic manufacturing demand could accelerate further. That would increase silver consumption inside the United States itself. So the next silver shock may not be triggered only by inflation or politics. It may be triggered by something even more unavoidable: physical scarcity. Once markets realize supply cannot keep up, price discovery becomes violent. Silver does not move in slow steps, it moves in shockwaves. This is why industrial supply is the hidden chapter behind the entire debate. Silver is not just rising because of headlines, it is rising because it is needed. And in the next, we will connect this directly to America's next growth engine. Green energy, defense expansion, and massive government spending could create the next unstoppable silver surge. This discussion will reveal the demand boom that could push silver into a historic supercycle. Green energy and defense spending boom. Now that we understand how tight silver supply has become, we must examine the demand engine that could overwhelm the market. The next major trigger is a massive surge in green energy and defense spending across the United States, because silver is not optional in these industries. It is one of the most irreplaceable metals in the modern technological economy. The clean energy transition is accelerating faster than most investors realize. Solar panels, battery systems, and upgraded electrical grids all require heavy silver usage. Solar power alone consumes enormous quantities of silver every year. And as America pushes renewable expansion, that demand is rising structurally. This is not a short-term trend. It is a long-term industrial transformation with silver at its core. Every new solar installation increases silver consumption. And unlike paper assets, that silver is physically locked into infrastructure. Now add electric vehicles into this demand shock. EVs require far more silver than traditional cars because of electronics, sensors, and power networks. As the US moves deeper into electrification, silver demand climbs aggressively. The metal becomes the hidden fuel of modern transportation. But green energy is only one side of the equation. Defense spending is the other force that can drive silver into a supply crisis. During periods of geopolitical tension, military budgets expand rapidly, and advanced defense technology relies heavily on silver-based components. Silver is used in aerospace systems, missile guidance, satellites, and secure communication hardware. That means rising defense investment translates directly into rising silver demand. Now, think about what happens when both green energy and defense expansion occur simultaneously. Industrial consumption becomes relentless, and supply tightness becomes extreme. This is why silver is different from gold. Gold can sit in vaults, but silver is constantly being consumed by the real economy. Once consumed, it is not easily recovered. That creates permanent pressure on the supply side. Now, if Trump-era industrial policy returns with an America First production push, domestic demand could accelerate even further. More manufacturing, more infrastructure, and more strategic stockpiling all increase silver usage. So political decisions can amplify an already existing industrial boom. Silver becomes the intersection point between policy and physical necessity. This is exactly how a supercycle begins. A supercycle is when demand grows faster than supply for years, not weeks. Silver has the perfect ingredients for that setup. Strategic importance, restricted mining growth, and exploding technology consumption all converge. And when markets finally recognize this convergence, repricing happens violently. Silver shocks are not smooth rallies, they are sudden awakenings. This is why the next silver move may surprise the public. By the time mainstream media notices, the market may already be far higher. So this is not just about inflation or speculation. It is about America's future economy requiring more silver than the world can easily provide. And in the next section, we will confront the question investors always ask during explosive moves. Is this real demand-driven breakout, or is Wall Street still controlling the market through manipulation narratives? Market manipulation or a real breakout? Now we reach one of the most controversial questions in the entire silver debate. Is silver rising because of true supply and demand, or because something artificial is breaking behind the scenes? For years, many investors have believed the silver market is controlled by Wall Street forces. And whether you agree or not, the perception itself shapes market psychology. Silver has always been one of the most volatile and emotionally charged metals. Its market is smaller than gold, which makes it more vulnerable to sharp institutional influence. Large futures positions can move silver dramatically in the short term. That is why silver often experiences sudden spikes and violent crashes. But here is the key distinction investors must understand. Short-term price pressure is not the same as long-term structural reality. Even if manipulation narratives exist, they cannot override physical scarcity forever. Real-world demand eventually forces true price discovery. When industrial consumption rises faster than mining supply, paper contracts cannot create metal. At some point, the physical market becomes the ultimate judge. This is where the current moment feels different from many past cycles. The industrial use of silver is now too large to ignore. Solar expansion, EV electrification, defense technology, and strategic stockpiling are real forces. These are not speculative stories, they are structural mechanisms of the modern economy. So if silver begins breaking out now, it may not be a temporary squeeze. It may be a fundamental repricing of a metal that has been undervalued for years. Wall Street can influence timing, but it cannot change math. And the math is showing rising demand with tight supply. That is why volatility should not be mistaken for weakness. Volatility is often the signal that a market is transitioning into a new phase. Now we must ask the historical question that separates normal rallies from historic explosions. Could silver be entering a true supercycle that reshapes the entire metals market? A supercycle happens when demand grows for years, while supply stays structurally limited. Silver fits that definition because industrial usage is expanding faster than mining output. History shows silver does not move in gentle steps when it awakens. In 1980, and again in 2011, silver delivered explosive moves that shocked global investors. Those moments were driven by inflation fear, monetary stress, and sudden demand acceleration. Today, many of those same ingredients are returning together. Silver is no longer just a precious metal sitting beside gold. It is now a strategic industrial resource embedded inside the future economy. That means this cycle could be stronger because demand is not optional. Green energy, defense systems, and electrification require silver regardless of price. Now, the next question becomes urgent for American investors watching closely. What exactly could trigger the next silver shock scenario from here? The answer is simple: a sudden collision of policy, inflation, and scarcity. If tariffs rise, inflation returns, and industrial stockpiling accelerates, silver could reprice violently. Silver shocks happen when the market realizes there is not enough metal available at current valuations. Once that realization spreads, price moves become fast and uncontrollable. This is why silver is not a slow investment story. It is a potential breakout event waiting for the right spark. Now, investors should understand the signals that matter most going forward. Silver reacts strongly to dollar weakness, Fed policy shifts, and political instability. If inflation expectations rise again, silver demand increases immediately. If rates fall or recession fears expand, metals become the hedge of choice. Industrial demand data is also critical. Rising solar production and defense spending are not headlines, they are structural drivers of real silver consumption. Supply remains the limiting factor, and that is what makes the next move dangerous. Silver cannot be produced instantly when demand surges. So what should smart U.S. investors watch? Key levels, policy announcements, trade escalation, and signs of physical tightness in the market. Because silver often moves before mainstream media acknowledges the reason. By the time the public notices, the shock is already underway. Now, the final verdict of this entire debate is clear. Trump policies may not be the sole cause, but they can be the catalyst that accelerates existing pressure. Inflation risk, Fed conflict, trade tension, and industrial scarcity are already building. Politics may simply be the match that lights the fuse. Silver is not rising by accident. It is rising because the structure of the global economy is demanding more metal than supply can easily provide. That is how historic moves begin. So the real question for 2026 is not whether silver will stay quiet. The question is when the next silver shock becomes impossible to ignore. And if you want to stay ahead of that shock, you must watch the signals now, not after the explosion. Because once silver wakes up, it does not knock politely, it breaks the door down. So as we bring this entire debate to a close, one truth becomes impossible to ignore. Silver is no longer just a forgotten metal sitting in the shadow of gold. It is becoming one of the most strategically important assets in the modern American economy. And the forces building behind it are not random, they are structural. We discussed how Trump-era policies could return with tariffs, industrial expansion, and geopolitical pressure. And those forces can directly ignite inflation risk, supply stress, and a renewed rush into hard assets. We also uncovered the deeper reality that silver demand is exploding through solar energy, electric vehicles, defense systems, and critical technology. This is not speculation, it is the foundation of the future economy. At the same time, silver supply remains tight, mining growth is slow, and physical scarcity is becoming harder to deny. That is the exact environment where shocks happen, not gradual moves. So the final verdict is clear. Trump may not be the only reason silver could surge, but his policies could become the catalyst that accelerates the next historic breakout. Silver is sitting at the intersection of inflation, politics, industrial necessity, and monetary trust. And when all of those forces collide, the market does not stay quiet for long. The next silver shock may come faster than the public expects. And by the time mainstream media notices, the move may already be underway. This is why staying informed now is critical. Because silver does not move slowly when it awakens, it moves violently and it rewrites headlines overnight. So keep watching the signals, keep watching the policy shifts, and most importantly, stay ahead of the next major metals cycle. If you found this breakdown valuable, make sure to like this video, subscribe to the channel, and turn on notifications. Because here, we don't follow market noise, we follow the real forces shaping America's financial future. Thank you for watching, and I'll see you in the next update.